Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Good morning. Today is February 25th, 2025, and this is the weekly update, the weekly market update. So let's go over it. First of all, we always want to start with recommendations. That's right out of the chute. That's where we want to get to. Let me pull up the screen and let's get started on that. So this week's recommendations. If you remember or if you follow along, in the past, I had recommended hedging 10% of Q1 corn by selling March futures. So let me check this box. We want to roll that hedge of 10% of Q1 corn. So you're sold in the March contract, 10% of your Q1 corn. We want to roll that to May. The way that's done is you're going to buy back your March. That'll exit your March position, and then you're going to sell that volume in the May contract. So you would be, if you've been following the recommendations, you should have some positions sold in March and some positions sold in May. And so here you would be buying back the March ones and increasing your May position. I'll get into the details while we're doing that in just a minute. We're also going to sell an additional 10% of new crop corn, and we're just a simple sale, just get it on the books. So with that, we would be up to 20% sold on new crop corn. If you, depending on where you're at, if you need to play catch up, that's where you're at. Or if you've sold a little bit more than that, maybe you want to pump the brakes a little. But sell an additional 10% of new crop corn, get to 20%. Now, let me stop sharing that and we're going to go into the analysis part of this week's video. Okay, so these charts that I show every week about Brazil crop progress, that's from the Brazilian agency called CONAB. That's similar to the USDA. I realize that sometimes I don't have the source on it, so that's from CONAB. And let's get a marker up here so we can highlight some stuff. The big news, highlighter, there we go. Well, we could leave that in green. All right, let me move this over to the side. The big news is Brazil's field work. So this is soybean harvest. Last year they were at 38%. This year they're at 36.5%. Basically, in a nutshell, what we're going to see in the Brazil field work numbers is that they're caught up. Last year was actually a pretty quick field work pace. So if you look at like a 5-year average, it's just right on pace. It's not a dramatic story of, wow, field work is fast, but it's right on pace. And a lot of the bigger states, I'm going to just highlight some of the bigger states. This was the big one that was delayed. Mato Grosso, well, they're only about 3 percentage points behind. Mato Grosso do Sul, they struggled a little bit last week, but they're a little bit delayed, but not horrible. Goiás is basically on pace. Paraná is 2 percentage points behind last year. That's on pace. Let's see if there's any other outliers. Minas is a little bit behind, but it's not a huge production state. It's also not. And then you have some states like, let me maybe get this in another color. Some states that are doing real well and actually kind of improving the national average. Tocantins was 25, they're at 40. Maranhão was 8%, they're at 35. Actually all three of these states that I'm showing, these 4 states, that's the northeastern expansion area. And so they're actually way ahead. So that's actually helped even out some of the other regions. Don't need to spend a ton of time on that. It's just they're on pace. All right, then here we go to the safrinha corn crop. Very similar story. First of all, I want to just say, like, week over week, look at that growth. That is pretty significant, almost 20 percentage points. And if you remember, right, last week, I think it was at 16 to 18% advance, week over week. So of that 53%, the lion's share has been put in the last 2 weeks. So really a lot of work got done on double crop corn over the last 2 weeks. And it's kind of a similar story. A couple of these are ahead. And then let's just point out some of the states that are a little bit behind last year, not necessarily outside of their window. Mato Grosso is delayed. Mato Grosso do Sul is delayed or behind last year. And that's basically it. So it's just it's not nearly as dramatic of a story now as it was a while back. There's not really a story in field work in Brazil. So that's, in a nutshell, that's that. Then we always want to go here with just the pyramid. This is kind of the transition point. We kind of do some general market updates, and then usually we're talking about crop production, and then we come here. This is how we make decisions. We build a market plan portfolio. If you're not familiar, if you're not watching this in real time, those recommendations are specific because we have worked together to build a portfolio for your operation. Build a market plan portfolio. And then based on that portfolio, then we establish seasonals, funds, technicals. That's how we kind of make the recommendations or tweak it week by week. And then finally, that's the call to action. An analogy that I like to use is that base level of the pyramid. That's like getting our roster, right? And then the middle line of the pyramid is like setting our weekly lineup. It's where we tweak it, we adjust it a little bit. And then play ball, right? The action part is just getting it done. All right. Now let's go into, this is the position of the funds on corn. So now we're right in the heart of the analysis. Let me get a marker here so we can go over this. So I actually have 24 and 25 on the same chart. And just a little bit, I'm going to start just showing the 25, but that reference was important. And if you'll notice, the spec funds, they were negative. They were down here, changes to red. They were down here in negative territory, basically this entire year of 2023. Almost the entire year, because in November, switch that to green. In November, they established a long position right here for the first time. And then they started kind of stair-stepping up. If you're familiar with this, I've drawn this almost on a weekly basis. And then we had, I believe it was 7 weeks in a row where they just increased it. Last week, so let's zoom in, kind of look at just what happened this last 3 weeks. If we could, oh, that's not cooperating. There we go. It's not going to let me zoom too well. But basically what happened was we got here to this highest level. Then last 2 weeks ago, it was reduced. And then last week, we're right back up to that level again. At this level, their long position, I'm rounding it, not necessarily that exact level, but once they got up here in this territory, they have established a big enough long position to where speculators, it's like when you blow up a balloon and it gets big enough to right before it pops. So I track that, or we track that, and then whenever speculators have such a big long position that they don't typically hold it at that scale for too long, that's when we're willing to kind of sell into that. So they got there already for a few weeks, right? And so that's a green light that we could sell. That doesn't mean they're done buying. It doesn't mean corn's done going up. It's just be mindful we're in that territory. Kind of like seasonals. Hey, we're in this window of time that historically we have good sales. It doesn't mean necessarily you need to sell everything on day one. It's just be mindful of that. So we do finally have those speculators at a good price, at a good long position. Think of it as corn is artificially high. That's the good news. Now let's just kind of look through some of those contracts. We're going to start with March. We're going to look at a lot of corn contracts. So I'm going to try to go through this fast because I'm guessing that I like technical analysis more than your average person. So I don't want to get too hung up on this, but I will go over it. For the first thing that I want to point out, and this is a big one to watch, I'm going to see if I can kind of mark the 20-day moving average. And what happened on yesterday's session is we lost that 20-day moving average. And that's pretty much not on new crop yet, but on our old crop corn. That support level has been lost on the major contracts. So this is March. We lost support and we had sold positions in corn for Q1 bushels of corn. So it's not that you're rooting for the corn market to go down, but if you're sold and it goes down, you got a sold position, right? So those should be for that roll we'll get to the roll in just a minute. And then the next one I wanted to show is May. Cancel, May. And let me get the black marker back up here. There we go. Same thing with the 20-day moving average. Trying to do a good job drawing there. Yesterday's session, it lost its support for basically the first time in a long time. We basically, since the spec funds started buying corn back in November, we've pretty much respected that 20-day moving average. So that is a pretty significant loss of support. And then the next image that I want to show you on corn is actually the calendar spread. Now, I don't want this to get too confusing if it's hard to visualize or it doesn't make a ton of sense. Don't get overwhelmed with this. But it is kind of important to visualize this and to track this. This is March corn minus May corn. Why are we looking at that? And this is why we're rolling it basically. So we have a situation where before too long, the March contract is going to be coming off the board. And I don't like to take that into right up to the limit, right? We want to be getting out of that position before it kind of loses liquidity. Remember I talked about all those spec fund buying. So what happens? They bought. They have a huge long position in March. So they have this big long position in March. We actually, towards the end of that on Q1 bushels, we sold into that. Towards that long move, deep into that, we sold into that. But now they have all of this long corn, and then they're going to come into the, first notice and then delivery period. So they're going to have to get out of those contracts. So if you're long March, what do you have to do? You have to sell March. And then if you want to stay long, you have to go buy a May or a July. Right? So if the reason I wanted to show the spread is because that huge sold position by the speculators, they had a huge sold position. Well, they have to sell March and then they have to buy May. So as they sell March comes down, May goes up, that spread falls. And that's exactly what we've seen, right? So they have to sell the March, so that's pressuring March, and then they have to buy May or July probably. But they have to, if they want to stay long, they got to get out of their March positions. So we've seen this spread come down. They're selling March down, and then they're buying May. So if you have that Q1 hedge on, we're just doing the opposite. right? You're getting out of your March corn and you're getting into the May corn. So you were sold March, so you're going to buy March, and then you have to go sell May to stay sold. The other spread, and I'm not going to spend much time on it. Like I said, I don't want to spreads can get real confusing real fast, and we don't want to add unnecessary noise to marketing decisions, but I do think it's important just to kind of have that perspective. This is the new crop, old crop, so July corn minus December corn. And this tells a very different story. It could change, but if we were to compare it, basically what kind of happened in the March spread was something, let me kind of draw, it kind of did one of those. And what happened in December, the new old crop, new crop spread was it's mainly, I'll even get a better color on this, let's get green. It's mainly just sideways at this level. Now, maybe it's going to lose this support, and maybe this spread's going to come down. Oh, I was trying to switch to red. Maybe it's going to lose its support. Maybe this spread's going to come down. Maybe that's still going to happen. We don't have a crystal ball. But I did want to point out that the new crop, old crop spread, so whatever bullish story was in corn is still fairly evident in July as far as actual demand. And we haven't even really gotten a weather situation on December corn. We don't know acres yet either. So there's still a lot of unknowns. So that spread that would be very bearish in the March-May contract, that's not necessarily, the reason I wanted to show this other spread is because that's not necessarily a bearish corn spread. That's a, oops, we've got to get out of long March positions and we've got to do something with them. So yeah, it's pressuring markets. Yes, we lost support. Yes, we've got kind of a little bit of a darker, just kind of a rain cloud over these markets. That's not necessarily, with what we know today, that's not necessarily just bearish corn. What we need to know if this is a lot more, has kind of a longer tail on the bearish side, or if it's mainly just kind of a weekly weird pressured situation. We really need to know how we're going to trade through this situation and how we're going to handle it. So I want to go, the final corn chart, just to go over this, is this December corn. And you can see that December corn has basically fallen to support. This December corn is a classic example of one of the hard things about grain marketing is that feeling that like one got away, right? So whatever it was, 5 sessions ago, right about in here, I recommend no action recommended, and then we go up and then we come down, and you have that bad feeling that one got away. And I just wanted to shed a little bit of light to that. First of all, there will always be kind of that fear of missing out on the best price in grain marketing, but that doesn't need to affect our decision making. So the recommendation this week, we started a little early on our corn sales, and here we're going to add into it with 10%. So I don't remember the exact level, but I want to say it was right around in here. We did about 10. And then here we're doing another 10. Right? That looks a little sloppy, but you guys, let me see if I can polish that up a little bit. Here we did 10. I'll just write 10. It's no better, but that's all right. Here we did another 10. So we're layering in an average on new crop. My plan when we were up here last week, I was like, we should probably sell 20% into this thing, get up to 30% on our new crop for a winter position. That's a pretty solid position. And then we backed off that. So what's the thought? Okay, let's get some of this. If this corn market bounces here and goes up, then we'll sell probably another 10% in here, or maybe it's even right around in that price level again. We'll sell another 10%, we'll be 30% priced, and we'll have some degree of an average with those. Honestly, if this corn market keeps showing some level of stability and reason to be optimistic, let's paint a picture the other way. You sold 10% here, you sold 10% here. then switches to red. This corn market comes down into here somewhere, finds support at maybe at this 200 day or something. We find we very well may just pick up a little bit of re-ownership and say, hey, coming into the spring, we don't want to have to live with those lower prices that we sold earlier. Let's just pick up a little December corn to come into a spring rally. So again, there's always that feeling that, oh, did I miss something? Did I lose an opportunity? Well, maybe. We always will. We can't get every single move perfect. That's not a realistic expectation. But the main thing is, okay, we made a sale. It's a little early in hindsight. That's okay. We came up here. We kind of missed a little tip, but we're averaging into that. We got a solid average sold price. We've got a solid position to defend. We didn't make any panic sales. We didn't make any panic sales on new crop lower. We've done solid. At the top end of the move, we've layered in a solid average position. That's good. That's good. Now, if that comes down and if we get real optimistic, we can always say, hey, I would change, I want to buy back some of this because I think this has another move up. So I want to reduce my position price and increase my exposure to the upside. We have that opportunity down the road. And if this thing keeps going, great. We've still got 80% of our new crop to price. We've got plenty more to sell to the upside. So we have options. And I think it's important just to kind of calibrate that, those expectations. Soybeans. And let's go with a red marker here. Soybeans are actually a little bit not too fun to see this move down. It took soybeans a lot longer for speculators to get long. They finally got long, and now that move is already down. Let's just kind of look. It's not nearly as dramatic, so to speak, on the soybean side of markets. This is July soybeans. This is where we established the re-ownership. And if you really want to think about it, basically, this has just become a value area right around in here. Has just kind of been a value area for beans where they just haven't done a ton, right? They're not really going up. They're not really going down. Technically, we're in a downtrend. Technically, we failed a golden cross. That is very alarming. We might very well get speculators to pressure this thing down, especially if corn can't hold its own. But it's also interesting to me that we haven't really seen beans. Corn kind of took it on the chin the last 2-3 sessions. Beans are basically sideways. And I want to make a point about that in just a minute. But before we do that, let's look at November beans. Really a very similar story. It's just, they're just kind of boxed in here, not going up, not going down. Let's make that black. There we go. Not going up, not going down, just kind of boxed in at this value area. And beans have to pick a direction. I mean, we're either going to get a rally out of beans similar to what we saw out of corn, or I'm afraid that corn and beans are both just going to kind of fall down and we'll have weak trade the last part of this winter. But then right after that, we have spring coming around. So next week, it's going to be March. March is Battle for Acres, and there's going to be this whole buildup around the Battle for Acres. So there's just a lot of headlines. We're finally to a point on corn and bean markets where the U.S. Production cycle and Battle for Acres and all that information, it's just right around the corner. So even if we get the wind knocked out of these markets, which absolutely can happen, I have a hunch that we're not far from getting headlines that would help us rebound. So I do think we might have some shorter term downward pressure. I'm not sure that means, hey, rally's over, best opportunities are in the books, we're done. I historically speaking, the better opportunities come in the spring, and I don't see why, with what we know today, this year would be any difference. I did want to make a little caveat. I'll just draw it up here. But last week, basically what happens from about 3 to 4 trading sessions ago, corn was way at the top and beans weren't really rallying. The corn fell and beans have basically stayed sideways. So if we want to think about that new crop, so that November soybeans divided by the December corn, that ratio was last week kind of at the pinnacle. It was at like 2.21, and then I just crunched the numbers this morning. It's at like 2.27. So we've gradually seen that ratio come back, and maybe you remember from previous videos, my opinion is I don't peg that at, hey, normal is 2.4. If it's under 2.4, it's going to 2.4, or normal is 2.5, or whatever number you want to pick out. For me, it's more of a range between about 2.3 to about 2.7, depending on cost of inputs and farmer preference and all sorts of other stuff. That ratio kind of floats. Now, under 2.3, I think we get a little support from that. And if it's way up, if it's at 2.8 or something like that, then the same thing would happen the other way. So I kind of view that as a range, and 2.3 for me is kind of already in the acceptable normal range, so to speak. So I just wanted to point out, we did, over the last few sessions, we did bring that ratio not quite back into alignment. I still think we have a little bit more work to do, but we're almost back into that 2.3 ratio. And I think, that's, if corn's going to fall, beans might fall with it. That doesn't mean that this ratio needs to hold. And the flip side is, if corn's going to rally, if corn just, like, let's look at that new crop, just fell to support and is going to keep going. If corn's going to keep going, then we can still have supportive markets. All right. Let me back out of this screen and open up. We'll kind of do the recap and get that screen sharing. Okay, so we went over the recommendations. We're going to roll the hedge. We're going to sell the new crop. So seasonally, it is neither a buy nor a sell on corn. Managed money have accumulated a large enough overbought position to justify selling corn. And corn went from an uptrend. It is now in a downtrend. Soybeans. Soybeans are seasonally a buy with Brazil's harvest. Speculators are long, but their long position is not big enough to justify selling. And soybeans are technically in a downtrend. A little comment on basis. Let's get this in English. Corn basis levels are tracking sideways in alignment with historic winter basis movement. Soybean basis levels are slightly lower than historic soybean basis for winter months. Corn market has lost its support at the 20-day moving average. Soybean market continues trading sideways, comma, but is technically in a downtrend. The trade of the last few sessions has brought the soybean corn ratio slightly closer together. Maybe instead of together, slightly closer to historic levels. All right, great. That's the wrap up. We've got 3 questions, and then we will be done with the video for this week. So question number 1, will battle for acres be supportive? Great question. I mean, I would love to have a crystal ball and to just be able to answer these emphatically. Right now, it feels like we're getting that adjustment by corn losing ground and soybeans not falling. So, battle for acres, we've got that, the ratio of beans to corn favors more corn acres. So either we're going to likely see more corn acres, or we should see some type of adjustment that justifies planting more beans. Right now, it seems like that adjustment is coming in the form of corn losing ground and beans staying solid. That does not seem supportive. It'll be interesting to me to see if the pressure we're seeing in the corn market is basically just this week because of the huge corn positions in March that need to be rolled. And if that's the pressure, then okay, we're going to get this pressure now. As soon as, we get past this roll, we can go back to a supported corn market. But if this does trade down, we might see soybean sideways, corn down until that ratio comes. And so I'm not convinced that we will get a supportive battle for acres. We might actually get that ratio coming into alignment because corn is falling. That's what started to happen over the last few trading sessions. And I mean, that's a very real possibility. I'm not convinced that we're going to have a supported battle for acres. Question number 2, is there still a weather story in South America? For soybeans, let's talk about that on 2 levels, right? Yield and field work. So field work is pretty much caught up. Soybeans are basically out of the woods from a yield standpoint. It's harvest. So from a yield standpoint, soybeans are pretty much in the clear. I mean, you can get some until you're done harvesting, right? You can get yield loss at harvest. It's just not significant risk. So I would be surprised if there is a reduction to yield on the Brazil soybean crop, because you don't usually lose significant yield at harvest. But even if there were to be a loss of yield at harvest, that's very difficult to see a market pricing that in as a bullish factor. So I would say yield on beans done, field work on beans, they've caught up. So, I mean, they can always fall a little bit behind or a little bit ahead, but it's harvest. So there's probably not any type of weather story for soybeans. Corn, from a fieldwork standpoint, they pretty much got caught up. We've got a long road ahead of us from a weather standpoint because it's a double crop, right? 75%, almost 80% of Brazil's corn is raised as a double crop, which exposes it to the potential of extreme drought. Basically, you have to get all of the rain that your crop needs before the dry season sets in. And so up until you're through, pollination and all that stuff, where is that last rain going to come? Is it going to come, a week before, pollination, so you have good pollination, good yield potential? Or are rains just going to shut off and you're done? So we still have weather potential, a potential for yield loss in corn. There's still a weather story, but there isn't currently a story, if that makes sense. So the only thing that could probably be a significant weather story out of South America, the biggest story is going to be yield loss on double crop corn. That is still a potential story, but it is not a current story. Right now, the story is field work is on track. Final question. Why is the corn market so much stronger than the soybean market? Why is the corn market stronger than the soybean market? I think that a better way to think about that, or a way that kind of answers, a way to rephrase that question that kind of answers it, is there is just such a damper over the soybean market. It's not necessarily that corn is outlandishly strong, but there's several bullish factors, and some of them are related to grain, but a lot of them honestly are related to inflation, geopolitical conflict. We saw wheat rally up. So there's the bullish factors in commodities have helped wheat a little bit, have helped corn quite a bit. Speculators are wanting to buy food, but then they look at the major commodities to buy and they look at beans and they're like, I can't buy that. There's so many beans in South America. What am I going to do with beans? There's no way they're going to have value. I'll just buy corn instead. And that's why we've kind of seen those markets pull apart so much, is because there's just this massive unpriced soybean crop in South America. The strength in the market, the fact that soybeans haven't just absolutely been in the dumps on the mat, I mean, that's testament to the strength underlying this market. And the silver lining, in my opinion, like the point of optimism, this winter rally that took us up over $5 on corn, for me, that can lift our spirits a little bit coming into the spring, because the market, farmers already know that corn can be priced at that. So now when it's time to sell new crop, we don't get super excited about a 450. We don't get super excited about a 470. I mean, we'll sell it. I recommended it, but it's 470. I mean, I'd really like 510, 520. Could you do that for me? And so for this corn market to kind of trade hands, it doesn't have to give farmers that price, but now that you've established that as a potential price that is realistic, that is traded, farmers are saying, well, I know a lot of times springtime, get a little hiccup at planting, we could be up there on new crop. I don't want to sell too much now. And so you create that, it just kind of lifts the ceiling a little bit of price potential. So it's very good news. We just have to chew through a lot of South American soybeans that are available before we can get too optimistic on that. All the same, we got recommendations for this week. Let's get our work done, and hopefully once we get past this roll, corn's right back up at it, and hopefully that'll pull beans up as well. Have a great rest of your day, great rest of your week.